Hello, everyone. Welcome to Central Nervous System's Acumatica training class today on sales taxes. We're just going to give it a minute to allow other folks to log in, and we'll start from there. All right, then. So Acumatica training class, sales taxes today. So welcome for joining. And if you're new here, this is just a brief overview of what we do here at Central Nervous Systems. We have weekly training classes that cover different topics within the realm of Acumatica. The schedule and upcoming classes can be found at acumaticaengineering.com/acumatica-training. These classes are only available to our clients. It's one of the added benefits of our support that we offer. All of these classes, past and current, today's included, will be recorded and available to you, and those can be found at acumaticaengineering.com/maintenance-classes. So if you'd like to have a look at a past class, maybe something that was recorded a month ago, you could definitely find it at that link. On the right-hand side here, we've got a little bit of an overview of what we're going through. We've got this week, April 6th, looking at sales taxes. Next week, we take a break because of the short week. And the following week, we will be looking at project transactions on the 20th, followed by some purchasing tips and processes on April 27th. The good thing about these classes is that there's an opportunity for questions, so please submit those questions using the question box, and we will answer as much as we have time for. If we can't answer a question or need to verify some more information before we can answer that question, we will post a video with those answers on our blog, which can be found at acumaticaengineering.com/engineering-blog. So now that we're done with that introduction, let's take us through what we're going to be covering today. Today's agenda is all about taxes. So first thing we're going to look at is taxes and tax IDs and the setup, as well as the multiple different options that are available there. We'll then look at what taxes drive off of, which are tax zones and categories. Following that full tax setup, those three components kind of make up the tax setup. We'll be looking at vendor and customer tax zones and how they potentially roll through to the accounts payable and taxes. And we'll follow up that with project and sales taxes. So getting our Acumatica projects to pull in tax settings and apply taxes on sales invoices when we run project billing. So making sure those taxes flow through properly. Finally, every month we have a number of different taxes that have been charged to customers or brought in on purchases. We want to be able to look at that information in the form of a tax report, and so we'll be having a look at that as well. All right, so first topic, taxes. Taxes is really the base level engine that's used to calculate our taxes. It's going to determine your GL accounts. It's going to determine the setup and how those taxes are applied and calculated. There are different tax types that include VAT, so value-added tax, something that we might be aware of in Canada, perhaps even in Europe. We've got sales taxes, use taxes, and withholding. So sales taxes is pretty straightforward. It's the general tax on sales. Use tax is a type of tax that we need to remit to a tax authority, but it is not charged by vendor. It is based on a self-assessment that one would conduct and remit payment for. And then we've got a withholding tax where you are withholding that sales tax. So let's have a look in Acumatica, see what that looks like. Hop in here. I've got taxes pinned to my quick menu workspace. So here's our tax area. And we're going to look at tax profiles here. So here we've got a number that are already set up, and let's have a look at something that we may or may not be familiar with. But if you're in Canada, you are definitely familiar with GST, which is a government sales tax. So this is set up here as a VAT, which is a value-added tax. We've got a calculation rule here that's looking at the exclusive document level. So it's going to look at the document total and then charge a calculation based on that. We've got down here the tax schedule. So this is kind of what is going to determine the rate, minimum or maximum amounts, if those are applicable. In this case, it's 5% across the board, and it's 5% whether it's on a purchase or 5% on a sale. Should that rate change, we'd be able to add in another line here with an effective date of today and make a different calculation based on a new rate as of today moving forward if we wanted to. So there's an ability to see the history of changes as well. And then we could look into this and see, well, where is this tax ID applied to in terms of a category and a zone? So this tax ID is within the GST tax category as well as the BC tax category. It's within the Canada BC taxable zone or the Canada Alberta tax zone. And then we make some GL account defaults. So we've got a tax payable account and a sub account, and then we've got a tax claimable account and sub account. The other good thing with setup is we can dictate whether there's a validity or an expiry date on this tax. So let's maybe try and create a tax here. And we'll just go through the different tax types, because choosing these different tax types is going to dictate what options are available. So if we were to go and add, we can put in a tax ID, for instance, VAT test. And we could just call it a test tax. And so as soon as I start to choose, so right now it's defaulted to a sales, there are no options available here for me to select. But if I were to change that to a VAT, we would get different options here that I could select. So we have, a partially deductible VAT. This is something that's used in Europe, used if you can only claim a portion of the tax applied. It's generally applicable when a company purchases goods and services to be used for business purposes rather than for their sales. We've got reversing VAT or pending VAT. Again, these are European options. Statistical VAT, which is something that's reported but not paid. So if this is selected, the rate in Acumatica is 0 for application, but the system still calculates the taxable amounts. Okay. We've got exempt VAT, so the application of a tax exempted on certain goods and services. We've got entering from a tax bill. So being able to enter a bill and pull in through to calculate the tax and the taxable amounts. And then over here, we've got our different calculation rules. So, document level is going to be looking at the doc totals, whereas if there are different rules for different lines on a document, we may want to apply those taxes based on the line details. So inclusive, exclusive, or compound, and then we've got the same options with document. All taxes to calculate and flow through properly need to be assigned to a tax agency. And in this case, we've got a number of different agencies, but if I was picking, GST, which is a federal tax, I would assign it to this federal authority. If I was picking PST, so a provincial sales tax, I would assign it to this provincial authority as the tax agency. So again, looking back at one more thing here. So withholding, again, these options disappear with withholding, and with use tax, a couple of things pop up right away. These two options cannot be combined. So if we take that off and we pick a different option, it might relieve that. So we'll delete that, and we'll have a look at another tax just to maybe get an indication. So let's look at sales tax here, Illinois sales tax. So again, this is a sales tax. None of these are going to be options for us. It's an exclusive document level tax, so it's looking at the total. There's no cash discount option. But here we see just one tax. We don't want this to calculate on purchases. We only want it to calculate on sales. It's 10%. And the start date is, basically the beginning of time for Acumatica. Now, this may or may not be coded to a payable. So because there's no expense, we're never going to be bringing that in on a purchase. There's nothing set up on the expense side, but definitely for the payable side, we're setting it up to a default. And so use tax expense account. Okay. Okay, let's have a look at another one maybe. Something 50% here. So this is a little bit of a unique tax. So this is an example of a VAT tax where it is partially deductible. So we've made that claim here that it's partially deductible, and we're going to include it in the VAT taxable total. It's going to be based on the line level instead of the document level. So it's going to look at the line details and make that assessment, because on those specific lines of a purchase, they may be used for business purposes. So we get a 50% tax rate deduction. When we make that selection, we get this deductible tax rate option down here, and we can make that claim of 50%. So now that we've reviewed taxes, how do we make use of those taxes? So let's go back into our presentation. We're going to look at tax zones here. So tax zones basically are, in some areas, taxes and their rates are defined at the federal level. In other areas, taxes are applied at multiple levels corresponding to geographical areas. So we've got federal, state, county, or municipal level taxes. The taxes that a company pay or collects and their rates may differ from place to place and may be common for the same geographical area. In Acumatica, you can organize taxes by groups that are applicable in the same area by creating tax zones. When you create taxes in the system, you assign them to those applicable tax zones. So let's have a look. We're going to go back to taxes here. We're going to look up tax zones. So over here, once this loads, we've got 9 different tax zones, or maybe locations or geographical regions. So if you're in Canada, we've got an Alberta tax zone, a British Columbia tax zone, an Ontario tax zone. So those are kind of driven by the province. In Illinois, we've got state level, and then we've got a specific one for maybe Chicago here. Indiana, Washington State. So it's basically looking at the geographical region. So if we were to look at, say, Indiana, it has only one tax, and it's a document level. If we were to look at the tax zone for British Columbia, which is where I'm located, there's a number of different applicable taxes that can be included within the zone. So we've got PST, we've got Canada GST. If there's a purchase and it's for business use, there's an option to use the Canada GST 50% deductible. And then there's also an option to use the Canada BC provincial sales tax self-assess. So these are the four taxes that would be applicable within the Canada BC tax zone. So let's go back into our presentation and have a look at the next driving piece that help dictate how taxes are calculated and used, which is tax categories. So the taxes and their rates for tax categories may also be different depending on the type of good or service that you are selling or purchasing. So, for example, depending on whether the goods sold are electronic goods or food, the applied rate of the sales tax may be different, even in the same geographical area. Uh, so in Canada, there's no GST on food, so that's why that reference is made. In Acumatica, you can create tax categories to group the taxes that are applicable to particular services or groups. When you create taxes in the system, you specify the tax categories to which the tax belongs. Okay. You can also select the tax category for non-stock and stock items defined in the system, and that's going to be key because this factor for non-stock and stock items is really going to play a role in project billing, which we'll get into later. But let's have a look at tax categories. So heading back into taxes, if we look at tax categories, there's a number of different ones again. So if we were to look at something like, say, taxable, it's just making a reference to taxable goods and services, and within that, the tax ID that's assigned to that category is the use tax for Washington. So going back to project billing example, so for what we do here at CNS, it's more likely that we'll have tax categories for non-stock items. So when we're setting up those non-stock items, we're going to want to assign one of these tax categories to that non-stock item. So in this particular case, if we have any clients in BC, we will have maybe this BC PST. And so when we set up any BC non-stock items, we'll assign this tax category to it if there's a PST applicable. Or we might assign GST to it if it's a service. Okay. So if we look back at BC tax, and this is assigned, it's basically dictating that both the PST and the GST must be calculated on that non-stock item or document. In this case, PST is calculated at the line level, GST is calculated at the document level. PST is calculated at the line level because some items may or may not be applicable for PST. Okay. So now that we've looked at tax zones and categories and tax IDs, let's move on to the next section of our presentation, which is looking at vendor and customer tax zones. So for taxes to calculate, the vendor or the customer needs to have a tax zone. The tax zone will then by default be pulled into an AP bill or an AR invoice. A blank zone means that the vendor or the customer is exempt. And so no taxes will be pulled in and no references to taxes will be pulled in. Remember, when you create taxes in the system, you assign them to all applicable tax zones. On the AP bill or AR invoice, you select the correct tax category for that detail line. If the tax for the category is not included on the tax zone, the tax will not calculate. So let's have a look at what that looks like. So if we were to head into Acumatica, let's head over to payables and let's look up pay bills and adjustment. All right, so now that that's loaded, let's find something that we can refer to and use as an example here. Purchase office supplies. Okay, let's have a look. Okay, so it doesn't look like any taxes were calculated here. And that's going to really be defined by the tax category. And so in this case, it's blank, so it's exempt by default. Well, let's make a copy of this and see if we can go through and make some adjustments, see what that will look like. Oops. This was a post 02/2021. So if we were to make a copy and we'll say it's 2021. It's closed. Let's say it's current. We're not going to save it anyway. And we're going to paste. Okay. So this is our new bill. So in this, we see that tax total is already calculated here, $435, and that's because the tax category is now been updated to taxable. So if we were to change that tax category and say BC PST, we may calculate something different based on the settings of that item or that vendor. Okay. So the original settings was taxable. And if we were to look at the tax details here, let's refresh this. Let's get our original settings in. Copy. Paste. So pulled in as taxable. If we look at the tax details there, we see that it's pulling in Canada GST and Canada GST 50%. Okay. If we were to update that to just GST, should calculate differently. If we were to save it, test. Let's try 2022. It's closed. Let's try a different month. There we go. So if we were to save it there, tax details now is just pulling in Canada GST. So if we were to look at where that's pulling from, we can find some information. So vendor, let's see if we can find this vendor. Okay, so this vendor tax zone is a US vendor. And there are no zones. The tax zone is default to Canada AB. So if we were to fix that and change it to something else, the tax zone, which is driving what the taxable category is, would have updated accordingly on the bill. Let's look at a different one. Blue line, purchasing water for the office. So something like this here. Tax category is exempt. Again, this is a US vendor, and purchase settings have an empty tax zone, which is why we have an empty tax category. So if we were to go and update this and say that it is maybe let's try, Canada BC and go save. If we were to make a copy of this, and paste, now that that tax zone is dictated, we pick up tax category taxable. Okay, so overall, the tax category on this line will dictate what taxes can be charged. The vendor settings, pointing to the appropriate tax zone, will dictate which taxes do get applied. Okay, so that's vendor tax zones in a nutshell. Same thing will apply for AR invoices. Okay. So now we're going to look at projects, because we do a lot of project billing and we're looking for taxes to flow from projects onto our project billing invoices. So with projects and sales taxes, tax assignment starts at the quote stage. Once converted to a project, the taxes flow through. Fixed fee invoices drive tax from the revenue budget. T&M invoices or time and material invoices drive taxes from the inventory item on the billable time or expense transaction. If the transaction doesn't have an inventory item, then it will pull from the AP bill tax category. And you'll see that that's not ideal. So so we want to assign tax to non-stock items. Okay, so let's have a look. Let's see if I can find something that may have been set up in that fashion. I'll close the screen. So if we go to projects, so okay, starts at the opportunity. So let's have a look at more items. And if I can find, oh, there's opportunities. And project quotes. Yes, I'll leave page. Discard this. Project quotes. Okay, let's have a look at this. ABC Holdings. So if we look at this project quote here, we've got a number of different inventory IDs and project tasks with quantities and unit costs and prices. But the tax categories here are all exempt, except for this. So when we convert this opportunity to a project, these selections are going to make their way across and apply accordingly. So why does this line say taxable? If we were to look at that inventory ID, its default tax category is taxable. And so that's why it pulled in as such. If we were to look at, say, labor, it will likely be empty or exempt. In this case, it's exempt. So once this gets pushed to a project, let's see if it has been pushed to a project. Oh, it has been, project 3. So if we were to open that up, those opportunity lines get moved to the revenue budget, and we see on this revenue budget, those tax categories have come through. And taxable is on that same rental line. So if we look at this budget, if we look at this project though, we're set up as a time and material project. So because this is a time and material project, any of the activity that uses these labor items is what is going to dictate the taxes that are calculated. So because these labor items are set up as exempt, we're going to see no taxes when we run project billing. If we were to update those labor items to say that they are taxable, for instance, if we're in BC at the 5% rate, it's those inventory items that's going to dictate the taxes when we run project billings. Okay. So if we have a look then, let's see if we can find a project that's fixed fee. Anything fixed here? Ah, fixed. Fixed. Let's look at this completed one. So fixed fee projects, because this is a fixed price, are going to drive purely on the tax category that's identified on the revenue budget. The time and the materials that we add to this are going to be irrelevant because we're billing based on revenue budget. In this case, tax category is empty, so its tax will be zero, essentially no. So that's why when we pick up these AR documents, we'll probably not see any taxes. No taxes. Okay. Let's see if we can find something else. Let's try this one. So revenue budget, tax categories are empty. I want to see if we can find any that are populated. Okay, so this one's populated, but it's exempt. So all in all, yeah, fixed fee is going to drive directly off of the tax category that's designated here and on the revenue budget. If we go back to say a time and material, so project 3, let's see if we can find transactions on this, because this was taxable. Nothing. So if we look at invoices here for this one, yeah, it didn't include that item, so there were no taxes calculated. Everything else was listed as exempt. Let's see if we can find something else. Let's see, maybe number 4. Let's try number 4. Okay, time and material, perfect. So yeah, very similar setup. So again, just to reiterate, the key with projects and ensuring that taxes flow through appropriately is for fixed, we're looking at revenue budget tax categories. For time and materials, we're making sure that the labor items that are set up on the revenue budget are all associated to taxes, as required. If this was Canada, all these labor items would most definitely be chargeable at a GST level, and taxable. Services are taxable. So those labor items would need to be set up once it opens here. Those labor items would definitely need to be set up to be taxable categories. In this case, most likely GST if this was Canadian. Okay. So that sums up taxes flow through in terms of AP bills and vendors and project and sales taxes. So now that we've got our tax setup complete, we've looked at the process and how taxes flow through, let's look at tax reporting. So we use tax reporting settings to set up the report requirements. We use report groups to link to the tax. And I'll go through what that means here shortly. And we prepare tax reports and review those reports. We then release the tax report, and if we have the correct setting chosen as a tax agency, we can automatically generate the tax bill based on that report. So let's go have a look. So heading back to the base of taxes, And again, I'll use the GST as an example here. So if we look at Canada GST, that is set up to the Canada Revenue Agency tax agency. So if we were to look, and you'll notice that the reporting groups here are input taxes on purchases and output taxes on sales. So if we were to go and we look at vendors, and we find that Canada Revenue Agency vendor, because this checkbox is selected, vendor is a tax agency, we get some tax agency setting options. And so it's at this level where you're able to uh, assign some default tax accounts. But more importantly, for the tax report settings, we're able to designate the period type, in this case month, as well as dictate whether or not we want to automatically generate the tax bill off of the tax report, which is going to be key into the next steps. So heading back to taxes, oops, we've got some preferences that we got to go through first before we can prepare a tax report. So report settings, if we look up that tax agency, Canada Revenue, we've got some report groups that we want to bring in. So in this case, we want to bring in the GST due this period on sales, which is a tax amount. We want to bring the GST reclaimed this period on purchases, which is also a tax amount. And then we want to get the net to be paid. And the net to be paid is a net tax. It's calculated basically by saying 1 plus 2. And if you'll note, even though the update rule here is output minus input, um, if the output here is 0 and the input is high, it's going to be negative. So you'll be adding a positive number plus a negative number. It should lower the net. That's why it's a 1 plus 2 here. And then we've got, okay, well, what's the total sales and what is the total purchases? These are just taxable reference amounts. Okay, and we want them to be both positive. That's why for purchases, we've flipped input minus output here so that it's a positive number. And so how are those reporting groups dictated? So we've got two types of reporting groups. We've got an output and we've got an input, and we saw that on the tax ID. Output is, sales. This is the taxes that I've charged out. And input, these are the taxes that I've paid. So it's more likely that you'll have more sales than purchases, and so that's why there's usually a net positive on taxes owing, but who knows. So heading back to taxes, we can set those reporting groups up with a little bit more detail. So if we pick that Canada Revenue Agency again, we say, okay, let's look at the settings or the lines that make up the output. So the output is the GST that we've charged out and the net GST to be claimed, and it's based on the sales, the taxable amount of sales. The input is basically going to be the same, but for purchases. So GST reclaimed on purchases, and then my net GST and my total purchases. And so that's how we get that calculation of 1 plus 2 equals 3. Now that that's set up, we can go and look at preparing the tax report. And again, this goes back to the tax ID where we need to make those designations on what is output and what is input at the tax ID level. So that's why we see here that on input, that's the reporting group, and this is the output group. So if we were to look at preparing a tax report, we can pick our agency, And so the default tax period that's going to pop up is the current one. In this case, there's no transactions at the 2015 date, but let's see if we can look at prior periods or pull up something that may already be set up here. Okay, so the December 2014 period, this is an old database. We had some transactions, and it looks like it was really just sales, but it computed a total amount of $614.50 of GST that we charged out in that period. We had no purchases, so it's empty. And so our net tax to be paid is 614.5. And that is based on total sales of 4726.92. So there's two options that we could do here. We could click into this and it will provide me with the information. So in this case, we've got one transaction at a 13% tax rate, which is going to have a component of GST and provincial sales tax most likely, because it's using the CA Ontario HST tax ID. Okay. Another way that we can do this is we can then, once the tax report is prepared, this one's been released, and because it's been released and that tax agency was set up to auto create the tax bill, once we released the tax report, it created a tax bill to remit the $614.50 back to the Canada Revenue Agency. So this is an automatically created bill based on the tax report. Now, in a real environment, we're probably going to see hundreds or dozens and hundreds or thousands of different transactions. So to get details on that, we might want to go and look at the tax details or the tax summary. In this case, we'll have a look at tax details, and it will provide us with a full breakdown of all the transactions that make up each category of the tax report. So Canada Revenue Agency, and we picked that period, which one, and if we run it, we're going to get an outline of these are the transactions that make up the GST due. These are the transactions that make up the net amount. Now, if there were purchases, we would see category 1, these are my sales. Category 2, these are my purchases. And then in category 3, we would see a bunch of pluses and minuses that make up the net GST to be paid. And then down here, these are the sales. Okay. Let's see if there's a prior period. The good thing about this is we can go back to prior periods and see what makes those up. So in this case, it looks like it was a bill purchase. Let's see if we can pick a much older one. Nope, nothing there. Try one more, and a small one there. So this is a good way to reconcile and make sure that things are coming across appropriately. Now, depending on the tax report settings that you choose, in this case, we've chosen to report on a month-to-month basis. Now, if I were to go back and make and complete a sale and post it to the December 2014 period, so this report has already been prepared and released, but if I were to go back and complete a sale that had taxable amounts charged to the December 2014 period, those taxes will not appear on this report because the December 2014 period tax report has already been prepared and released and therefore is closed. So those new charges will pick up on the next period. So there are times if you run your tax report and then there are subsequent transactions that hit that period, those tax lines will appear on the next report. So preparing a tax report is always going to pick up that period's transactions plus any prior transactions that may have been applied after the period, after the previous tax report's been closed. So that's something to be mindful of here. There may be times when your tax report doesn't fully reconcile to the GL balance, particularly if we're coding things back in time. Okay. So heading back into our presentation, we reviewed taxes. We had a look at tax zones and categories and those three components that make up how taxes are calculated and driven. We went through looking at some AP bills and looking at the customer-vendor relationship that's based on tax zones. Then we looked at projects and identified how to take opportunities and ensure tax setup at the opportunity level goes through to the project. Keeping in mind that for fixed fee, we're driving taxes off of the revenue budget, and for time and materials, taxes are driven off of the non-stock item or expense items used. And then we had a look at the tax report setup, bringing everything all together. So that's our presentation today. Let's take a look and see if I have any questions in the question box here. Doesn't look like I do. All right, so that concludes our chat today. Again, thanks for joining. Next presentation is going to be on April 20th, project transactions, followed by purchasing on the 27th. This recording will be available to you at acumaticaengineering.com/maintenance-classes. So please feel free to head there and have a look at this video or any others that might be there. Thank you again.